Hello and welcome to the TradeNeon software channel. My name is Simon Reichert and I'm quite excited about today's video as this marks the beginning of a new series we will launch on this channel. This is going to be a series that we have been doing on the TradeNeon Academy channel for quite some time now, our German TradeNeon channel, and it's going to be about futures insights. Basically, Futures Insights is our TradeNeon futures analysis platform, and each and every month we will have a closer look at one specific market that is currently fundamentally interesting, and we will have a closer look at it and analyze it. What do I mean by a currently interesting market? A currently interesting market for us in swing trading is going to be a market that is relevant in terms of commitment of traders report data, in terms of seasonalities, and in terms of the term structure. And all of these things we can analyze within Futures Insights. But before we do that, this time we will focus on a basic overview of Futures Insights, what kind of indicators we can find within Futures Insights, and what kind of information we can get from this platform. Oh, and by the way, if you like this information that we will launch this new series now on this YouTube channel, you can be even more excited because from now on and from the release of Level of Interest, which is going to be the 15th of May, we will provide content to this channel regularly. But before we get lost in any more words, I would say let's have a closer look at Futures Insights. This is our Futures Insights dashboard, and this is also where the entire magic happens. Quick disclaimer before we delve deeper, don't be irritated by these German words like Metalle, which means precious metals, or the specific markets. This platform is still currently in German, but obviously with the release of Level of Interest. So with this, in this current month, we will also adapt it to the English language, so you can use it in whatever language you prefer, English or German. But I would say let's quickly have a look at what we can see when we go into the dashboard. So as we mentioned before, we have Metalle here, which is our precious metal. So this is basically an overview of all the markets we can analyze within Futures Insights. So we have Metalle, which is our precious metals. We have the energy markets. We have our grain markets. We have our soft commodities. This word is already in English. That's quite practical. Then we have our meat markets. And last but not least, our financials. And I would say before we have a look at one market in particular, I would say let's quickly focus on all the indicators that we can see in this dashboard and that we receive these symbols for. So first of all, we have MMCOT and PMPU-COT. Currently for our precious metals, we don't get any signals, but you can see right here, for example, for the grain markets, we receive some long signals, which are displayed in green, and we receive some short, or we receive rather one short signal, which is indicated in red. These indicators focus on the commitment of traders report data, or more precise, the disaggregated commitment of traders report. In this commitment of traders report, specific market participants that are either trading this underlying good commercially, or they are just simply speculating on trends, for example, have to report their positions to an institution that is called CFTC. And the CFTC, the Commodity Futures Trading Commission, then goes ahead and basically crafts a report and then publishes it, where we can get some quite interesting data about what these market participants are doing. And for our purposes, we extract the information for two specific groups of market participants, which are MM, which stands for Managed Money, and PMPU, which stands for Producers, Merchants, Processors, and Users. And just so we have a rough idea of what these terms refer to, Managed Money relates mostly to large institutions that speculate on price movements. So with these, we basically interpret them as trend traders, and PMPU are all those that are commercially involved with this underlying good. So it's either producers, as I mentioned before, producers, merchants, processors, and users. It's basically just buyers and sellers. So for example, if we go to wheat, it could be farmers basically selling their products, and it could be buyers, for example, the industry that are making whatever you make from wheat, bread, for example. Then we have the flow cube, and the flow cube basically displays the price chart and gives us additional information whether the price went up or down. Well, this is pretty basic, but also did the traded volume go up or down, and did the open interest go up or down, and then combines it to one specific signal, which could be strong short building, for example. So strong short building would mean that from last week, the price went down. We had more traded volume than last week, and we have more open interest. Weak short building, on the other hand, for wheat would mean that the price also went down. We also had more open interest than the week before, but instead we had less traded volume. Seasonals is quite a straightforward one, I would say, where we identified, well, timeframes within the market for, in our case, for the last 10 years, where the market only went up or down, or in most cases at least. So we have like the statistical advantage on our side that the market tends to either go up in those or during those times, or goes down. And finally, we have our term structure indicators, which you can see right here, the final two. But I would say we cover these when we have a closer look at one specific market, which is going to be the wheat market in a second. Oh, and also before I forget about it, in the final column, you have these nice fancy little boxes where you can basically just mark a market for either long, in this case, a green button. Well, we see it as long at least, or you can press it again, then it turns red. So you have an overview of what the markets are, whether the markets are currently rather long or short, fundamentally interesting, so you don't have to do the entire analysis over again. And before I forget about it, maybe you already noticed that for the financials, we don't have a term structure available. So to explain this, in commodity market, future prices reflect storage costs, seasonal supply and demand effects, and also physical availability. This then creates what we call the term structure. And the term structure can either be in contango state, or it can be in backwardation. Contango simply means that future contracts that get closer to expiration become cheaper in time. This is simply because in that case, the underlying good does not have to be, for example, stored as long as future contracts that are further into the future in terms of the expiry. In the currency markets, this, however, works a little differently, because currency markets are no physical goods in that sense. So there are no storage costs and or transport issues. This would just result in the term structure of financials in rather being like a straightforward interest rate driven term structure, instead of the typical term structure that we know from our resources, for example, where we can see bends and curves. So we don't really have that in financials. And this is also where we don't have it in futures insights. So with this out of the way, I would say let's promptly head into our chosen market, which is going to be, again, the wheat market. So what do we see when we arrive at our chosen market? We can first get some basic information about the market and the future contract itself. Well, this probably doesn't say you much, but it's basically the tick size, the tick value, the exchange, the common trading hours, and the mini future for this market. And what you can also see is our dry powder indicators for managed money long and managed money short. So together, these two indicators, together with the OBOS indicator of overbought, oversold indicator, have to be seen in conjunction. So first, we can get a general idea of whether this market is currently, from the managed money point of view, interesting in terms of the commitment of traders report data. which we can do in the dry powder indicators. And then we can validate this idea with our overbought, oversold indicator. What I mean by that, I will clear this up in a second. But let's maybe focus for some time what they actually mean, what kind of information we get from that. And that is, well, it's quite simply answered by the name of these indicators, which is dry powder indicator. With these indicators, and I will not focus on them specifically, how we can interpret them, that is something we'll do in the videos to come, where we have a look at one specific market and analyze it specifically, but rather this tells us how much dry powder do these market participants still have in reserve. So basically, how much power do they have left for an ongoing trend? So what you can see here on the right is the price chart for wheat. So what we can see right here is that we had a downward trend for quite some time now. So from initially we had a high here in 2022, which you can see right here. We had prices from around 1,300 to 1,000, I would say 500. This is basically the range where we traded. And then we had down over 3 years to now just roughly 500. So basically what we can get from that is that the trend has been going for quite some time now, and that at least the COT data tells us that the short side is at the moment quite engaged. Or what is a better description for this scenario is that they hold quite a substantial amount of short open interest. And that is an open interest position that, if you relate it to the relevant past, so this cloud right here, you could obviously use these points as well, but these are like so far into the past that they are not really relevant for our current analysis. So if you rather have a look at this current relevant cloud with like bright dots, you can see that it approaches quite an extreme position. So there have only been 1, 2, 3 positions that have been even more extreme in the past. And the idea we can now gain from this picture is that, well, if all the trading institutions have used their dry powder and have approached an extreme position, which institution is going to buy even more short? Like, if you take the past into account, it's simply not going to happen. Obviously, there is always the chance that even more trading institutions could step in and buy even more short positions. So we have to take this into account, but at least this picture gives us a good idea of how the market basically dynamics are currently. And to validate this even further, as I mentioned earlier, we have the OBOS indicator, where we have an algorithm working in the back that relates the current position that we got from the dry powder indicators to the total open interest, to the current price and the price of the last, right now from the last year. You can change this if you toggle these buttons right here. So you can extend the look-back period, but right now 1 year is usually a period that is quite appropriate and that is quite accurate. So we have price, we have the entire open interest, and then we also have the amount of trading institutions involved. And so finally, we get a signal also from this OBS indicator. It's usually a bit hard to actually move the mouse perfectly over it, but right now we got it with 94%. So this means from the last year, this is the 94th most extreme position that we had in the market. And also, if this indicator gives a signal, then we will also receive a signal in the dashboard, which we saw earlier from the managed money COT site. Okay, we also had the PMPUs. For the PMPUs, it's basically the complete opposite. So for these traders, for these market participants, we assume that they want to basically hedge themselves against price fluctuation. So remember what I said, these are commercial users of this good. So they want to buy this product when it's cheap for them, and they want to sell it when it's basically expensive, or when they see it as expensive. And what we can take from this picture is that if quite a majority of institutions that fall under this PMPU category currently buy this product, yet only a handful of institutions sell this product, then they probably see this underlying good as quite cheap for the moment being. This then results in an increased chance that the prices for this good in the, I would say, near to mid-term future are going to rise again. Keep that in mind, however, it's always about chances. So it's not about security. It's not like you have the 100% chance that the prices are going to rise again, but rather it's an increased chance. It's better than 50%. And then in a second step, we always want to combine, and this is quite important. I don't think I mentioned this before. This is only the initial step. This is where we have a look at the fundamental state of the market, and we get an idea of whether this market is going to tend long or short. But to confirm our trade, we always want to have a chart set up that we get from analyzing the chart. So as you can see right here, we want to have a specific point of interest in the chart where we can see a reversal, where we can see a pullback setup or a breakout, whatever. But we don't just simply take these signals from futures insights and say, well, this market is fundamentally long, let's immediately go for a long trade. This is not the way to do it. And then same thing as we had before with the managed money side, our overbought, oversold indicator for on PMPU side. So if you get a signal from that, it is displayed on the Futures Insights dashboard. So next up, we have our open interest, where you can basically trace the price development over time, which you can see in green here. And then you also have the blue open interest line. So last time the COT data was updated, we had roughly 456,000 open interest open contracts within the market. Then we have our flower cube, which I described earlier. I don't think I have to say much more to that. We will have a closer look at these and also the seasonals when we have a look at our markets specifically in the upcoming videos. And then lastly, we also have our term structure. So you also have the slider right here where you can see how the term structure developed over time and if it's currently shifting into a backwardation, which would be very relevant for long signals. We will also have a closer look at that if that happens in real time. But obviously we don't want to focus solely on our eyes. So basically to see a change in this curve with our eyes, but rather we want to trust our indicator for that, which basically measures the price relations between the current front contract and the first couple of consecutive future contracts that come after the front contract. So this would be the front contract, which is closest to expiring, usually has the most traded volume, and it takes this into relationship with the following contracts. And then if we have price changes, we can see that quite quickly with this indicator. And this is actually quite significant because changes in these price relationships between the future contracts can result in quite significant price rallies, which, for example, you can see right here where the indicator really went up and the price followed after that. So this doesn't look as significant, but certainly in the market that was quite a substantial move. And the problem that we have if we only have a look at our term structure is that if we see the term structure shifting, which we don't see right here, it's always in contango. So the following contracts are more expensive than the current front contract. But if it's basically shifted, it's usually too late. So the term structure is already in a backwardation. But for us, it's the most crucial thing to identify current shifts in the term structure, because then we don't miss the long move that could be very beneficial for our long trade. And with this being said, I think it's a good idea to now conclude the video as there has been a lot of important information that we have talked about. If you have any ideas, suggestions, recommendations, or whatever you feel like posting, please drop us a comment in the comments, and we will get back to you as soon as possible. If you have stuck around until now, I thank you very much for your time, and I hope to see you in the next episode.